Let's go now to our guest, Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
We're back. We are here in New York City. I haven't been in this city for almost over a month.
I haven't left.
There you go. You've been tied to the desk.
I'd say chained, imprisoned.
Well, let's talk about
it.
Let's talk about it because it was sleepy. Then it was bullish leading into Nashville. And Nashville, we touched 70K on Bitcoin on the back of former President Donald Trump's speech in Nashville. And then we were mostly okay last week. And then over the weekend, and even at the end of last week, some deleveraging started to happen. And then, of course, there was a pretty major crash in equities, in cryptos, in Bitcoin
FX
on
well.
Sunday night, Monday morning, and FX. What happened?
So there's just so many things to talk about.
Let's start with Japan, though. What happened with the yen?
So basically, for the past year and a half, dollar yen has been steadily inching higher from, let's say the 130s all the way up to like 161, right? And that's a function of the fact that U.S. interest rates and other G10 interest rates were significantly higher than Japanese interest rates. Japanese interest rates were, below zero essentially, and they were slowly raising them, by 10 basis points and a little bit more. But essentially, because of that huge interest rate differential, folks were constantly longing dollars and shorting yen and earning the carry. The most popular carry trade was, MEX yen, where you super high interest in MEX and super cheap cost to borrow on the yen, and so there are a lot of folks piled into the trade over the past year. The BOJ has tried a handful of times to intervene, but ultimately it failed because the currency just kept going higher, and so it reached new highs. And so, going into the BOJ meeting last week, they were expected to hike rates and kind of slow their bond purchases and broadly kind of like take a step back from all the easing measures that they have. And they came out, more hawkish than expected. And basically that started a huge kind of deleveraging in that complex. And so high level, what the carry trade is in the context of the BOJ is, folks borrow yen at super cheap levels, then they sell it short to go buy a different currency, and then they go buy an asset with that currency. And so basically there's a lot of money that was in Japan that got moved offshore because there's no place to actually earn any like substantial interest on that money. Mm-hmm. And so over the past 15, 20 years, right, there's been a lot of money just going from Japan offshore to purchase these assets and to conduct this quote-unquote carry trade. And what happens when, the yen starts massively appreciating is your liability starts ticking up in value. And then in addition, when the asset that you've purchased also starts going down in value, let's say U.S. equities or commercial real estate, whatever it may be, like you got hit with like a double whammy and then margin calls and then cycle of deleveraging. And so you basically had, the start of a very big unwind. Mm-hmm. The way I describe it is, this dollar yen trade, like basically front end interest rates in Japan have been sub 1% for my entire lifetime, basically. Mm-hmm. And so that carry trade has been building for 20 years.
Yeah.
And, over the past 2 weeks, you've had an unwind of that, but it's just getting going.
Yeah.
Right. And so all these dollars that have flown, offshore and to the U.S., et cetera. And basically what's happening is these corporates need to bring back some of the money home, right? And these pensions, et cetera. And so this repatriation flow has caused a bid to the yen. And it caused risk assets to sell off. Now, the risk asset sell-off is a function of the BOJ stuff, but it's also a function of the data that you got in the U.S.
Right.
And the data has constantly been slowing on a consistent basis here
for
in the
several
U.S.
months now.
A couple of months. And you had this non-farm payrolls print on Friday that showed material weakness in the labor market, even though it was a gain of like 113,000 jobs. Like the private sector component was particularly weak, and we've seen some other jolts and other kind of labor market indicators that are softening. And typically, the concerns around the softening labor market are super important because the Fed has a dual mandate, right? The inflation and full employment. And so in instances where unemployment starts ticking up, like that starts to trigger like, holy shit, like, am I going to be on the wrong side of my mandate? And that specifically was what Powell highlighted during the last FOMC as something that would trigger him to be more dovish or to remove restrictive measures of monetary policy. And so everyone is focused on the labor market because if it cracks, right, then the Fed will be forced to be more dovish. And now kind of what the read-through was from that soft print was that, you could potentially be heading into like a hard landing scenario. And that's based on the fact that typically when, you see unemployment rise by 50 basis points or so, you're likely going to see, there's normally a bimodal distribution, basically. So you're most likely going to see a big uptick in unemployment. And in addition, like when you think about like what actually causes a severe downturn in the market, it's really tough for the market to slow down without people losing their jobs, because as long as people have their jobs, they have a stream of cash flows. They can meet their mortgage payments. They can meet their credit card payments.
They can buy stuff at the mall. A lot of them will get 401k contributions.
Correct.
And, yeah.
And so like when you start to see that slow down, in the context of like, rates already being super restrictive, like that can actually lead to like a pretty big slowdown. And so folks started to price in more of a hard landing scenario, more of a recession probability.
And then the BOJ hiked rates more than expected. Also,
there was chatter about it going 25 basis points. Now you've had a bit of a retracement in that move because one of the BOJ governors came out last night.
He said, "Don't worry,"
and he's like, we're obviously going to consider like basically financial conditions. Like they're not going to hike rates when like the Topix is down 10%.
Yeah, I mean
right?
they were on our Sunday night there, Monday morning. They were circuit breakers.
Yeah, so
like if people remember during COVID,
down 12%.
The only time in our recent lifetimes that's happened was like March 2020 during COVID, where they literally halt the entire stock exchange.
Yeah.
Crazy.
And just to give you some context, like MUFG, like Mitsubishi Financial
biggest bank in Japan, right?
Biggest bank in Japan was down 20% Monday night.
Yeah.
If I told people in the U.S. that J.P. Morgan Chase was down 20%,
it would be financial chaos in this country.
Okay, that's the polite way of putting it.
Yeah, that's the largest bank in the world, right? Out. JPM, I believe.
One of them by asset.
But there's measures,
Sure.
But yes, this is a big deal. In Japan, what, the fourth or fifth largest economy by GDP? Fourth, I think?
I think
the
third. It depends on if you block the EU as one or not.
Somebody was asking me, they're like, oh my God, like something blah, blah, blah can happen in Japan of this much of a thing. I was like, well,
they
to be clear,
so much money.
It's literally like a top economy in the world.
Yes, absolutely.
And it was also the only, let me just step back actually. I want to talk about the carry because just to what I'm hearing from your explanation, the cost of capital in Japan was basically zero or very low. So it was a great thing to borrow. You had almost no interest payments to make. So you could borrow.
And in addition, what was happening was you borrowed that thing, but it was also depreciating.
So it was weakening until recently. It was weakening.
Correct.
So your repayment was actually going down.
Yeah.
You were paying almost nothing in principal borrowing cost, and the value, the total principal of your repayment was getting cheaper over time.
Depends if you hedge it or
what you were using it for. But yeah,
but that was the whole idea.
So people were loading up though, going there for effectively liquidity, cheap borrowing. It's similar to when we had basically zero rates.
Correct.
But in general, theirs were even on real terms over the past negative.
Yeah.
So and sometimes you're getting paid to borrow.
Yeah.
And then they're using that to buy other things like risk assets, like equities, U.S. tech stocks, right?
Sure.
And so to unwind this trade, you just like. You have to back out of all the things. You have to sell what you bought, use that to rebuy the yen. That causes the equities to go down or the other assets. I mean, if you were doing Bitcoin, then it would be Bitcoin that goes down.
But nobody was doing it.
Well, no, not really. Because this is really what are we talking about? Large institutional traders, hedge funds?
Big, like Japanese pensions, like real money type of folks.
Deep, big capital.
Yeah.
But that means
some
even
speculators. Yeah.
Okay, so now that this has happened, or
And it's just beginning.
okay, so
guys.
yeah, what does that mean?
I mean,
do
basically,
we expect a lot more like
over time, yes.
so is it merely a weakening bid that used to be here because of that carry trade, or is it like going to be is it sell pressure?
Yeah, I mean, I think what you're gonna see is these real money types, like they're not stupid, right? They're not gonna sell assets when they're puking at the dead lows,
Right.
right? And so it's gonna be a methodical kind of unwind of some of those trades, and they'll slowly, happen over time. You
Yeah.
had the kind of dramatic like margin calls and kind of big aggressive move, taking out all the speculators, blah blah blah, and now you'll just see like a slow trickle of that stuff.
Yeah.
But it really depends on like one, like how aggressive the BOJ is going to be, the data in
Yeah.
Japan and stuff. If things start to cool,
Part of the reason, right? I mean, for the hike here is that they are dealing with their own inflation.
Correct.
Right. So just
Correct.
like us, they've got to do something to keep their inflation down for their
Yes.
population.
Yes. But they also have a big debt issue.
Yeah.
Where if they hike rates too much, then the interest that they're paying, and so it all leads to Bitcoin. But like, let's be honest.
I was gonna say, gosh, it's like a Rube Goldberg machine.
Yeah.
When you create like a machine with like pulleys and like baskets and all that thing, where it's like this overly engineered system.
Yeah.
It's just extremely complicated ball of wires where you're like, oh crap, we got to do this thing to do that thing, but if we do that thing, then this other thing's gonna happen.
No, I mean, yeah, you're right. I mean,
pretty rough.
It's like you can't have like I forgot what the analogy is, but you can't have like a free floating currency and like centralized economy. Like that's where the issue lies. And so if they did nothing, their currency would have like kept depreciating, and they would have to like constantly intervene, and the market would have bought it up. So then they are like, well, we have to like back away from these stimulus measures and raise rates back to like real levels. And then, holy shit, what happens? You get a massive deleveraging event, and your currency appreciates way too quickly.
Right.
It leads to asset sell-off because think about this, right? Like what Japan's economy, right? They run a huge current account surplus. All of their corporates earn money abroad. They sell cars in America.
Yeah.
And Toyota then
technology
takes
and
the Toyota takes those dollars and so they have their net long dollars, and so when dollar yen collapses and the yen starts appreciating, like that's some mark-to-market loss for those guys holding the dollars. And so, like, yeah, I mean, there's a good reason why the Topix is down and Nikkei is down, et cetera. And so it's all kind of like intertwined in a way.
Pretty wild too.
But realistically, like, what does it come down to? And like, what are the lessons you can take away from this? But the lessons are you've got a huge, complex financial market that's basically driven by central banks.
Yeah.
Right? And the liquidity that they inject, the facilities they have, and it's a super like controlled thing. And ultimately, like there's just so many unintended consequences of some of the policies that we've just, done. And it, people like to think that it's proactive policy, but they're just reacting. It's like, those machines with the groundhogs, like they come up and
the alligator head or whatever.
You hit
frog.
one and the other one comes up, and you hit the other one. It's like boom, and it's like think about it now. Like in the U.S., it's like okay, you start easing, you take rates to 3%. What happens? Some would argue that means you're going to be back on the path of like reinflation in short order, because people then start being like, holy shit, I can actually afford a mortgage now. Maybe I'll start buying houses again. Maybe they'll unfreeze the housing market.
Right.
And, asset prices might start going up again. And it just leads to this endless loop of like financialization that makes you be like, what is really the value of money? And what are these central bankers like actually doing?
Yeah. They're tinkering perpetually. And they're it's again, that's the system. Like they're forced to do that.
Yeah. And so like that's why like the value proposition of Bitcoin in these instances like gets highlighted. At the same time though, and what I would remind listeners is that like it is still a financial asset.
Yeah.
And when risk assets trade to one correlation, like there's no risk asset that is safe and I'll give you the example of gold during 2008. Like, it was still down.
I mean, gold was down on Monday. It was down 2+%.
Yeah, absolutely.
Not,
it was also
wasn't
down on Friday.
Yeah, it wasn't down the
15
15 that Bitcoin went down. But
and
I mean,
you have geopolitical concerns.
Because I saw this, Peter Schiff and others were, dunking on Bitcoin. So much for store of value. In a risk-off move, it went down.
But that's also what happens to gold.
And it's also separately, the Bitcoin bet isn't that you can't engineer a global decentralized store of value from 0 to 1 like magic. It's currently capitalizing. It wouldn't have growth potential if it had already become a stable store of value, right? Part of the Bitcoin bet today, if you invest in Bitcoin, is a bet that it will become that in the future. It's obviously still in its infancy in its early stages, so it didn't seem fair, that dunking to me.
Yeah, I'm not going to entertain anything Peter Schiff says. But, ultimately, I do think that, you do want to be in hard assets like gold and stuff. And, the U.S., Japan, I mean, everywhere has its own challenges. I mean, China is dealing with, a massive slowdown right now. Their property market, is under a ton of pressure, and it's being masked and stuff. And that's the second or third largest economy, however you want to think about it.
Yeah.
And then, in certain places, they've tried all these efforts to get inflation to come down, but it's still going higher. And, there's just so many, different, problems out there.
Yeah.
That, I don't, to be honest, I hope that Bitcoin is an answer for this stuff.
Right.
But it's not.
It's not the answer.
It's not the answer.
There's a lot of other factors here.
Yeah.
Do you think the Fed markets are pricing in 5 cuts now by the end of 525 bips cuts by the end of the year? People are speculating.
It's come down a little bit.
Okay, well, there was some freak out in the rates market.
And it's closer to.
But some people are calling Japan's more aggressive than expected hike a grave policy error. I've seen other people calling the Fed's lack of a easing cut last week a grave policy error.
Yeah.
What should the Fed do in your mind now? Should they definitely cut some amount in September? Some people were even talking earlier this week when there was panic a little bit in financial markets that they should be an emergency cut.
Yeah.
What's your view on that?
I think it's pretty clear from the data and what we're forecasting that rates are probably too restrictive already, and that you should be closer to neutral. And neutral, depends on what your idea is, but let's say that's 3%, 3.25%, somewhere around there. And so, traditional monetary policy analysis would tell you that you should get to neutral as soon as possible. And so I would tend to agree with them that they probably should have started cutting in the July meeting, but it doesn't really align well with kind of how the Fed does things. Like Jackson Hole is typically when they announce a big, policy shift.
Yeah.
It's also just the election makes things a little weird and stuff. And so I do think that they should have been reducing. I'm not a fan of the emergency cuts because the economy is still fine. Growth is still fine. The unemployment rate's only at 4.3%. And core PCE is
major
right
U.S. stock indexes are still up 10 to 15% on the year. It's not like we're in a terrible
downturn
or anything.
We're not in a terrible
so it would
downturn.
Signal weakness that isn't actually there.
Yeah.
To do an emergency cut.
And I, prefer a Fed that isn't panicked when there isn't any reason to panic. And so, but I do think that they should be cutting, and I think they should. I believe just front load the cuts.
Just go 50, 50, and then we're
50,
there.
And then you're at neutral, and then you observe.
Yeah.
Right. It's a difficult kind of place to. I don't want to be Jerome Powell. He has one of the hardest jobs on the planet.
He handles it with quite poise.
He does.
Quite a lot of poise.
But it's whatever you do, there's a consequence to it, and it's if you ease too early, we just came from a period where inflation got to 8%.
Yeah.
Are you concerned about that?
Oh, yeah.
If you don't ease, the deficit, the national debt, and people are going to start losing jobs like crazy.
And let's be real, the central bank, regardless of whether they are part of the U.S. government or not, they're not. They are part of America. The national debt does matter to Jay Powell and the rest of the 20,000 Federal Reserve employees. So they can't hike forever. That's just a fact.
No, they can't.
That's
the
a fact.
Numbers don't.
They don't add up.
But it's ultimately where are we headed? It's MMT world. Huge debt to GDP. The Fed constantly buying the the U.S. Treasury issues, and anytime shit goes crazy, everybody wants a bailout.
Yeah.
Everybody wants a stimulus.
Well, and they have conditioned the market for that, unfortunately.
Absolutely, literally, it's helicopter money.
Yeah.
Like they just send people money.
Yeah, you
And
couldn't
they
even like
wired
not.
it to your
I was going to say
accounts.
because if it's not like they mailed a check that you could
No,
choose
no,
not
no,
to
no.
deposit.
No,
It just
no, no.
appeared.
Just appears.
They used your tax refund.
Correct.
Dollar bank account information to just literally airdrop it into your account.
Yeah, and then inflation isn't going to come from that. Like
Literally, here's free money.
In hindsight, you're like, what? How on earth did you guys
Not
think
to mention,
that wasn't going to cause it?
look,
It was one of the biggest policy blunders.
It really was. Think about like $800, or I think what most people got, or something around
was
there.
like,
Right?
more? You got three of them.
Okay, so like $2,000. Now that
Yeah.
probably helped for about a month or two, but at the expense of effectively net 30% price inflation over 3 years. No one, if they
Yeah,
could
but
know.
it wasn't even just that though. You had the PPP loans.
No, for sure,
Right,
for sure.
the student loan forgiveness.
But I'm just saying, it seems
just
so
threw
nice.
so much
The
money.
stimmies seem nice.
Yeah.
But I would have absolutely given that money back to not pay, $15 for a breakfast burrito.
I agree.
I mean, I think most
Yeah.
people would now.
But it's like,
But it is kind of funny. I just to make fun of the populace a little for demanding the bailout, demanding the stimmies, and then being like, "Why do we have inflation?" It's like, well,
no, it's just like
if
the
we'd all
Elizabeth
agreed to not
Warren.
spend it,
Oh, it's the corporates. They're price gouging.
no, dude, we
Like-
all went out and spent that money on
Yeah.
GameStop stock.
No. Let's just
Like-
do
and, like-
universal basic income. Just
Yeah.
send people money, and
it's
that'll
troubling.
fix problems. But yeah,
Well, we will catch up with you again. There's more to come here. Obviously, Bitcoin and crypto is repriced a bit lower, but I mean, at 56K, it's still,
No,
if you told me we crashed to 50K a year ago, if someone had busted
know.
in here while we were recording, we would have laughed at that. So
I would've been
I
so
urge people
happy.
to have some perspective. By the way, equities also, like I said, I mean, if you're a passive equity investor,
No, they're
like
still
most
up
Americans are, you're
10%
still doing
plus.
fine.
Yeah,
But
you know,
it did
or
seem
around-
scary.
right
It
around
feels
there.
like that Monday of this week will be a pretty famous market day. People will remember that day.
they will. But it wasn't even that crazy. I mean, the Japanese moves were crazy, and
Yeah.
the emergency cut pricing is crazy. But I don't know. I feel like just so desensitized because I work in crypto.
There was
and,
that thing where it was like there's all these memes going around where it's like a little baby and he's crying and it says -5%, and then it's like minus. It was they're giving baby shots is what I
Yeah.
saw, and a bunch of them are they get a shot and they cry. It's what a baby does usually when they get a shot. It's like stock investor -5%, and then there's this one of a baby getting a shot and he just doesn't do anything. He just looks at the doctor like this, and they're like crypto like -75%. He's just like unfazed completely.
Unfazed. We don't have a central bank to bail us out.
Well,
Every
let's go.
time it goes crazy.
Yeah, no, we don't. Let's go back into crypto next week a bit more.
Absolutely.
There have been some interesting things, Bitcoin dominance, a bunch of interesting sort of things happening there. But we are over time. So, Beimnet, my friend, thank you for coming on Galaxy Brains.
Thank you.